So we now move to our next panel session. As has been mentioned in a number of the discussions so far today, there are major geopolitical shifts underway and substantial impacts in terms of how climate change will have an impact as we go forward, and what the risks and opportunities around climate change might be. And to examine that, we have an absolutely first-rate panel led by an absolutely first-rate chair. Could you welcome, please, Chris Hayward, the Policy Chairman of the City of London Corporation and the Deputy Chair of the City UK Board, and his panel to the stage. Thank you.
Well, a very good morning, ladies and gentlemen, and thank you, Miles, for introducing me and the panel in the way that you did. This is going to be, I hope, not just a really interesting panel session, but also hopefully a really interactive and participative panel session as well, on the risks and opportunities in the current geopolitical environment for our drive to net zero. A major, major topic. As Miles said, my role is as policy chairman and political leader of the City of London Corporation, but also we have a very close working partnership with the City UK, and hence I serve as its deputy chairman. And it's an absolute delight, therefore, to be chairing this session with a very distinguished, and as you would expect at an international conference, international panel this morning here. Can I remind you all there will be an opportunity for you to ask questions after I've put some standard questions to all of the panel. So do think about what those questions might be. You can raise your hand, we'll bring a microphone to you, but also you can also register those online, and I will see them on the laptop that I've got as well. So we know this is a hugely important topic. We've all heard the statistics on the proportion of the global population which will be eligible to vote in an election this year. And boy, are there a lot of elections this year. And it's absolutely critical, I believe, that we maintain momentum on the road to net zero during this period of potential political turbulence and beyond. So we're going to talk this morning about three things. First of all, in the current political headwinds in this year of elections, is it possible for the industry to continue to drive and maintain the pace of its efforts to meet net zero commitments? Secondly, halfway as we are now between the COPs, what positive momentum can we build on? How do we develop solutions that work for the global south? And thirdly, how can innovative approaches in areas like blended finance, voluntary carbon markets and data support the drive to net zero? And to tackle these big questions, I'm delighted to be joined by an extremely experienced, as I say, expert international panel. Tim Wilkins on my far left, who leads Freshfields' Global Sustainable Team. Big welcome to you, Tim. Antonio Ballabriga here, who wears a number of hats, including Global Head of Sustainability, Intelligence and Advocacy at the BBVA. Great to have you here, Tony, as well. Alice Squires, who is Managing Director and Head of Investor Advisory at Rothschild & Co. And Elena Amirkhanova, who is partner of the PwC UK Sustainability Practice. So we've lots to talk about, and let's get straight on with it. And we'll deal first of all with that first theme I mentioned about this sort of increasingly fragmented approach towards net zero. And Tony, I'd like to start with you, if I may. We're hearing about a new era which will reshape our approach on the drive to net zero. What are some of the trends that we need to be alert to, do you think?
Okay, thanks, Chris. A great pleasure to be here. Thanks for the invitation and congratulations to the City UK for this international conference. Well, I mean, we are living in a huge transformation of the financial system. It's a systemic change. We are in the middle of this transformation to reshape how the financial system works. And I think we think that we are entering in a new phase, no? A new conversation around climate change and sustainability, no? To embed this into the financial system. No? I will say that there are 5 elements very briefly. One is about the evolution of regulation. We have seen a regulatory tsunami in the recent years, in some jurisdictions, especially in the EU, focusing on taxonomies, on disclosure, on banking supervision. We think that now we are entering in the phase that we have to have a more simplified approach, more pragmatism, obviously ambition as well, but focusing on the idea to avoid fragmentation. No? It was coming in the previous panel. So that's very important, at least for a global bank as we are. No? So this is the first. The second one is about the focus on transition finance. We are not going to help the whole economy to transition if we only finance the sustainable or pure green or dark activities. No? So we need to finance all sectors, all activities, and help them to decarbonize. Our role is to invest and finance our clients' emissions reduction. No? Not to simplify, reduce our emissions. So that's very important. And this will only happen if it has economic sense and it is fair. No? The third idea on this new phase is that we are focusing a lot on credibility. So we have been working quite a lot on regulation, on robust standards, also financial institutions, but also credibility is something that is on the top of the table. A lot of pressure from all stakeholders. So this is another key element of this new phase or new era. No? The fourth element, obviously, is the polarization. You mentioned, and we have seen in the previous speakers, that obviously we have now elections this year, in UK also very soon, and well, this doesn't help, okay? This doesn't help, but our opinion is that despite the final results, the change will happen in any case. So maybe the path will be a little bit different, but the direction is clear. This is unstoppable, because more and more, this is going to have economic sense. So if it has economic sense, that will drive the change. That's our views. Yeah.
Tony, thanks very much indeed for opening up on that. Alice, I want to turn to you next. You're someone who is in close contact with investors. Can you help perhaps therefore to set the scene around that? What's the mindset of investors when it comes to ESG targets and their expectations of net zero?
I think it's become increasingly difficult for investors. And as I was coming to this conference today, I was looking at the headlines and thinking about it as a fund manager might think about it. And the first headline was the Scottish government potentially rolling back climate targets, an announcement today. And the second headline was the decline in European electric vehicle sales. And as an investor trying to make sense of how which investments you choose, how you deliver returns for your underlying investors with the uncertainty that's driven by that, I think it's very difficult. And we've seen, we're really seeing increasing skepticism from investors around the targets that companies are standing behind at the moment, and an expectation that those targets are probably going to have to be revised. What's happened, I think, that we see as a trend, and certainly in the last year and since Russia-Ukraine, is in a way the market at the moment is currently rewarding some of those revisions. So if you look at the BP share price reaction in response to their changing climate targets, if you look at the valuation in the energy sector, there is almost, there's an inverse relationship for energy stocks with more ambitious climate ambitions currently. So I think we're in a very, very challenging time, and their expectations of net zero are longer term. We have to get there. Shorter term, we're in a disorderly transition where, with higher inflation and higher interest rates, it's less obvious that, how we're going to do that. And when I think back to pre-Russia-Ukraine and some of the engagements that investors were having with companies with high carbon footprints, it was very much, why aren't you allocating more capital? Why is it only X million? Why can't you allocate more and more capital to the transition? That's a very different conversation today, and it's a much more returns-focused conversation today, because the demand side hasn't come through in perhaps the way that people might have expected. And therefore, the conversation is a lot more around, well, we don't know how and when this is going to happen, so perhaps we'd rather you returned that capital to us via dividends or share buybacks than invested it, given the lack of visibility and the lack of consistency out there.
Thanks, Alice, very much indeed. Tim, can I turn to you now? Now, you're based in the US. I know you flew in on the red eye yesterday morning to join us, so thank you for doing that. Now, we know in the US that there have been growing anti-ESG pressures, I think it's fair to say, especially ahead of the election that you face in your country this year. What do you think the response to that will likely be? How do you think this will possibly play out?
Yeah, it's great the way that Alice sort of started to set the stage for the chilling effect. And in the US, I don't mean to scare the audience too much, but it really is quite real. We have 17 attorneys general, state attorneys generals now, who have brought claims to say that even just factoring in ESG issues into how a pension fund, for example, manages their portfolio may be a violation of the law. And my favorite is the New Hampshire congressperson who said that it actually should be a crime to consider ESG factors punishable on 5 years in prison. Fortunately, that legislation didn't go through. But it's quite clear to me that there's a lot of money behind, and maybe this is as a lawyer speaking, but behind a lot of litigation that is going to be brought to challenge any attempts by the regulators, including, as you know, the SEC just came out with its own climate change disclosure rules, but they immediately landed in court, no surprise to any of us. But the types of challenges are quite interesting. We have challenges including something called the major questions doctrine in the US, which just says, should regulators even be considering these type of major important questions? Shouldn't this be something that's decided by the legislature? There's even a First Amendment challenge to say that the SEC disclosure rules could be considered compelled speech of corporations. So it's a complex, a little bit scary area of where the litigation and legislation framework is. But here, and part of the reason why I'm so happy to travel overseas, the international clients that we've been advising have been looking to the regulations that are coming out of Europe. As you know, we have CSRD, CSDDD, sorry for all the acronyms, but all of these various disclosure rules that do seem like this is going to lead to pressure on the multinationals to say, how do we consider which standard to go forward? And even in the US, we still have California, which has come out with scope 1, 2, and 3 disclosure requirements. So it's a mixed bag, but I do think that companies are going to have to, the expression we've been using is green hushing, still get on with thinking about these issues and disclosure, but you will see less trumpeting of that before the elections, not to have their head above the parapet.
Thanks, Tim, very much indeed. Elena, let me turn to you now, if I may. You've worked with companies worldwide. How is the current global environment, would you say, impacting their strategies to achieve net zero?
Yes, good morning, everyone. I have indeed worked, I've been based in the UK for the last 13 years, but I have been working with the companies worldwide. And net zero, of course, requires a major, enormous commitment, global commitment and collective commitment. But the implementation has to happen locally. And then, of course, the global environment with its uncertainty, not very unstable, unpredictable, of course, it takes a toll. And some of the things which Alice said, we are observing them as well. So first of all, companies' commitment, and maybe not commitment, but the level of their ambition with regard to net zero, and being as vocal about it as they were maybe a number of years ago, has softened a little bit. They also looking at targets, and maybe not revising them publicly, but definitely looking at how to justify the targets better, whether these are right targets, and really becoming much more granular in that sense. And the third element is is, of course, reprioritizing their investment and their spend. So that's probably a big area, and prioritizing only areas which are necessary here and now, so such as regulatory compliance or some immediate opportunities. But having said this, I don't think that global environment is the only one to blame, because if I look at my 20 years in pure play sustainability consulting and mainly working with financial sector and its clients, for the first maybe 10, 15 years, we were mainly advising clients on where not to invest. So in the context of project finance or anything else. And then it moved to still where not to invest, but also where to invest. And I would say the last 10 years, this is where we've seen that unprecedented attention to sustainability and opportunities in sustainability. And I would say that it's probably what's happening now, it's a bit of a balancing or rebalancing act. Because now we have areas where not to invest, where to invest, but also we have a transition finance coming on board. And looking at the assets and portfolios, part of the portfolios which need to transition, but they probably don't present an obvious commercial opportunity. So I would say what's happening now, it might look as really, really fragmented and a bit of a slowdown, but I would say it's probably rebalancing of that sustainability market as a whole.
Thank you very much, panel, for dealing with that first theme of the three so comprehensively. Perhaps I'll just add three very brief comments of my own to close off this one. I do think that maintaining momentum on the road to net zero is hugely important, both nationally and internationally. And this includes in the COP process as well, I might add. So we can't let a fragmented political environment dampen the levels of ambition. We will see at COP29 in Baku, particularly after the historic agreements of COP28. So one of the things we will do in the City of London Corporation each year is hold a Net Zero Delivery Summit, which we hold at Mansion House in June of each year, midway between the COPs. Basically almost as a health check to see where we are between COPs, to see actually what we're delivering, which is the key thing, that we are actually delivering on the targets. So let's move on now to the second theme, which is about developing shared approaches to net zero. And Tony, again, I'm going to kick off with you, if I may, because 2/3 of your business is in emerging economies, I believe, where we've seen them challenge some of the approaches taken to green and sustainable finance in developed markets. How do we get to a new architecture for climate finance that suits the needs of the emerging economies?
Yeah. Yes, you are right. Well, first of all, let's say that we see this challenge as the greatest business opportunity for a bank in this decade, globally speaking. But obviously, we'll need to have all, even emerging economies also, on board. Otherwise, we are going to fail. Because it's not UK net zero, it's not Europe, it's not US, even US. So we need to have all on board, no? And the challenge, the investment gap is huge, no? According to the IEA, last year, well, they said that, well, we have to multiply by 4 to 2.8 trillion a year of investment only for clean energy, no? In emerging economies, and we are far from that. So the architecture that we have, it doesn't work. So we need to, when I said before that we need a fair transition beyond business case, this is also with the relation with North and the South, no? We think that three key topics, and are all related to obviously the global governance we have around climate, no? One is we need to push on this World Bank reform and get more embedded the risking mechanism from the MDBs and the public finance to attract the private capital to fill that gap, no? And create the right context to the risk, because at the end, this massive investment will only happen with the private sector. And we don't have the conditions, obviously. The money is there, ready to go, but we don't have the right risk situation now in those countries. So that's absolutely critical. So we are quite optimistic on the reforms done by the World Bank recently. So that's the very first idea. The second idea is that we have to have ambition on the new target, the famous $100 billion that we promised to deliver in Copenhagen already. And we have just arrived 89 billion according to OECD just a couple of years ago. We still are far from the requirements. 100 billion in front of 2.8 trillion. So we have to multiply probably by 2, by 3. And then obviously with the risk mechanisms to multiply this effect with the private sector. So that's the second idea. And the third one is not forget adaptation. It is very important. We are mobilizing not enough resources to adaptation. We don't have built, I think, a great appealing business case for that, for private sector, so that's challenging. But adaptation is also a key topic. I was in Peru just a few weeks ago, and the discussion is not mitigation, the discussion is about adaptation. So I think that's also a key topic on this new architecture.
Thanks, Tony, very much indeed. Tim, I want to ask you, we've seen a whole new regulation architecture emerge around net zero, which you're immersed in, I'm sure. And whilst we hope that businesses will be able to push governments towards better harmonisation in the longer term, we think there will be more fragmentation in the short term. What are you seeing amongst the companies you work with?
Yeah, I mean, this is a real challenge, and even this question of kind of jurisdiction picking, like selecting which jurisdictions to set up your entities, and it's very interesting to see how City UK is thinking about where the UK can have competitive advantages. And we have seen, for example, the latest EU directive on CSDDD and CSRD, so in the supply chain and also reporting disclosures, that the multinationals are trying to decide, should I do it on an entity-wide basis, or should I just kind of pick off Germany, which is usually the one where the requirement is done, and use that as a test case. But what to me is really concerning, sort of pulling back on the bigger picture, is in order for us to really make the type of progress that we're hoping for, you will need some companies to agree to be the leaders and step out and do the type of disclosure that investors, as you're talking about, are really looking for, so that it can make that type of step change. But the laws in fragmentation are playing a bit of a cautious game right now. So we'll see, I think, from clients, those who are willing to step out and be leaders and start producing these sort of global impact, and hopefully, Tony, that will help in thinking about emerging markets as well. And then some who are, because of the regulations, still just stay in the middle of the pack.
Thanks very much for that. Alice, turning to you. Now, you've heard some of the perspectives on multilateral governance and regulation from both Tony and Tim. Do you see any opportunities for greater harmonisation of corporate interests regarding the achievement of net zero commitments?
I think there are some, but I think there are already some good examples, and I think many industries have been working quite closely together in terms of collaborating or sharing of different ideas and technologies around that. And there can always be more of that as new technologies are developed. I think it's on one hand probably been helpful for companies to have harmonisation of the disclosure and regulatory requirements that they're required to submit to, and to provide consistency and comparability around data in terms of what different companies are doing. Would I say that companies have necessarily welcomed it? I think for the smaller companies, it does create quite a significant burden in terms of 200-page sustainability reports. And I think there is a danger in some of that a lot of the debate and focus and time and energy is spent in that area, as opposed to really thinking about what moves the needle and enables companies to develop solutions which they can then have the confidence to scale up. In terms of sort of where do we see sort of greater opportunities? Certainly, the heavy carbon industries like energy, like building materials and transport, I think there are very good examples within those industries of harmonisation and collaboration around standards. Some of the other industries that we're working with at the moment, defence is a sector where, particularly in this country, we're working together with a number of defence companies looking at how collaboration can happen better within that sector.
Thank you very much. And Elena, finally on this theme from you, from your perspective, do you think our industry could be looking at the move to net zero more strategically? What could we learn, say, from other industries collaborating globally on this?
Yes, thank you. In my view, I think it's not a question in terms of looking at it strategically. I think it's actually imperative. So, because if I were to unpack what, actually again, probably building what Alice said, if I were to unpack what net zero is for financial sector or for any financial sector institution, it's emissions, and these are emissions from the institution itself, emissions from the supply chain, and emissions from the sector where this institution invests. And here the biggest number of emissions comes from the sectors, so comes from the what's called financed emissions. And here it's the question of collaboration and question of understanding different industries and question of understanding how these industries approach net zero transition and what opportunities for financial sector can come from those transitions. So this basically becomes a question of necessity rather than something which is nice to have. And again, having said that, we do have quite good examples of joint initiatives already happening, so such as Sustainable Markets Initiative, for example. So this collaboration does happen, but probably yet to scale up.
Thanks very much, team. The third theme, final theme I want to just explore is the role of the International Financial Centre in delivering net zero, and in particular what the United Kingdom can do. And I'm going to start with you, Alice, to kick us off. What do you see as the main strengths of the UK in developing solutions to net zero? Do you see any opportunities on the horizon?
I think the main strengths of the UK are in within the sort of university and research centres and the companies that we have. I mean, we have in this country more universities in the top 100 in the world than any other countries. And so I think within the sort of academic research that's going on in terms of developing different potential solutions, there's a lot of reasons to be optimistic. And certainly when we see university collaborations and private companies come to work with us in terms of looking for capital, there's some amazing things going on. There is a bottleneck, I think, in terms of the financing of some of the solutions and the very long-term nature of investment that can be required, and the health of the UK public markets at the moment in terms of taking something that's been incubated and developed and then providing it with capital is an issue. So I think, in terms of when we see opportunities on the horizon, I think it is in thinking about. It's not so much that there isn't. There's plenty of there's eye-watering telephone number size amounts of money that says it's interested in investing in the transition, but the time frame of that investment, and when we think about things like nuclear technology or those sorts of solutions, have we got the right time frame and the amount of money that's prepared to really invest over the time required? Because the short-term capital, as we've talked about in terms of the valuations, is much more problematic.
Alice, let me just add to that. I've been asked to sort of mention a couple of thoughts that we have in the City of London Corporation around UK engagement, and there's two I would pick up on. One is voluntary carbon markets, and the second is transition finance as areas that I think the UK can actually show great global leadership on. On the former, I think it's absolutely critical that we develop the market tools, standards and incentives to scale financing for the credible transition. That's key. We've actually been asked to provide the Secretariat for the Transition Finance Market Review, which is going on at the moment. Hugely important piece of work. We've put out a call for evidence, and I hope people in this room will participate on that. On the latter, I think carbon markets and the purchase of carbon credits are a valuable tool for businesses. And the UK has a strong track record of leadership in the carbon market space, so I would just make that observation. Tim, what do you think business needs most to be able to move forward in this complex operating environment?
Well, I like the fact that all of us have been talking about collaborations, but unfortunately in the US, collaborations have become under attack from a legal point of view, including letters to law firms wondering if we are advising on quote-unquote climate cartels, which was an interesting expression. I can think of another cartel that is not a climate cartel. But what's quite interesting to me is seeing how in the UK, We have seen the CMA talk at least about an open door policy to have discussions where collaborations that are in the benefit of a sustainability objective is something we can consider. And it's great that Tony's on the panel here because we also have been involved in various net zero asset alliances and talking about how this collaboration, especially in the finance world, could start coming up with the solutions, because it's very hard to imagine how we'll be successful with just one bank, one financial institution moving forward. So coming up with ways that regulators, not only in the UK, but also speaking to their counterparts in Europe and the US, can find a space by which collaboration doesn't necessarily mean anti-competitive in the ESG space.
Thank you very much. Tony, let me turn to you on this. What do you see as the role of the UK and us in this room as UK business leaders in shaping this new approach to net zero?
Well, I will share some ideas that obviously probably I will share basically the same ideas to the EU, but I think that internally, I think that we need from governments more predictability. That's absolutely critical for the financial sector or for any actor in the economy, so that it's important. The second one is what was mentioned, as I said before, simplification, faster permitting, less bureaucracy. This not means less ambition. It means make things easier. We cannot wait 2.5 years waiting for a solar panel grant. It is absolutely ridiculous, an SME, no? That doesn't create incentives. And the third one idea internally is creating the enabling environment. This is the right role of the governments, to create, smart regulations and also incentives to promote that behavioral change that we need for SMEs, households, and so on, but also to promote innovation, because 55% of the technologies are already there with no green premium. But then we have still a lot of technologies that have to be discovered in sectors difficult to abate, and we need to innovate, and we need public sector providing the right incentives to invest in that, and that's an opportunity for UK. It's also an opportunity for the EU, no? So that's, I think, the main message on the internal. And then externally, we have come in a lot of our collaboration about partnerships, and I think governments have to partner more and more, as I said before, also to support emerging economies, but also to develop the work that the UK Task Force on Transition Plans, for instance, have done. It's really impressive. So this is something that can be a goodwill for a public good for the whole economy globally. So that's the right of approach. Also for business leaders, collaborate more within your industry to make this change. No? And finally, I think we should ask partnering in order to empower consumers. No? So this will change thanks to the demand. And probably we know that 95% of the people, they are not going to pay more for a sustainable product. That's fine. But each citizen has the power to decide who has to lead the regulation and the policies in the country. So let's use that power, to have the right leaders in order to create this enabling environment to get businesses and then the financial sector move the change. No? So that's my thing. That's my request. Not only for UK, I would say, generally speaking.
Okay, thanks, Tony, very much. And Elena, what do you see the role of industry in supporting the UK's position globally?
So from what I've seen, UK has been consistently aligned with general sense, with a commitment to climate. So with different degrees and different nuances, but generally there has been alignment for quite a few years. And what it means that within the last 10 years, I would say it's built a really strong knowledge and a practical experience within professional services, within financial institutions themselves. And we have already seen this, as was mentioned, for example, transition pathway work and work of some other institutions. This kind of shows it up. So my view is that this work, together with the policy makers' efforts, can really be applied and used to set the standards for other markets, which don't have the same history or the same depth and the same breadth of also practical implementation of some of the approaches.
Thank you very much indeed. So, ladies and gentlemen, you've heard our expert panel's views on these matters. Let's take some questions or comments from you in the room here. Does anybody want to kick us off, and we can bring a microphone to you to ask your question or make your point? Don't be shy. We don't bite, honestly. Nobody want to ask anything? I've got some questions. Okay, one gentleman here. Let's take you then, sir. And then I've got some questions which have come in over the net, as they say, and I'll move to those as well. Please, introduce yourself as well, please.
Sure. Vikas Agarwal from ACCA, we're a professional accountancy body.
Yeah.
Tim, this is probably more for you, but is there not just going to be more pragmatic for US companies to start reporting on this, given the need to comply with CSRD? I mean, there's about 3,500 companies conservatively in the US that are going to have to do this. Aren't they basically being dragged into it anyway? So it's almost moot what happens within US domestic policy.
And that's why our phone has been ringing. Yes, so you're absolutely right. Quite a few. But how you report on CSRD, as you know, there's also a phasing in of CSRD. So many of the companies, the big multinational US companies, are deciding whether to just their German subsidiary or do it on an enterprise-wide basis. But even, I would say, encouraging both for California disclosure requirements and the SEC, most companies are starting to prepare now, despite the fact that it's chugging through the courts. But to be ready, and Alice actually said it's not cheap, by the way, to get all the preparation ready for these disclosure documents. So most of our clients are starting to look at it now, which means that's encouraging, and hopefully they'll be leaders in that area.
And to complement him,
Yeah.
not only beyond the US, I think we shouldn't remind also that we have the ISSB there.
Yes.
So it's absolutely critical, a fast adoption of emerging economies. So, and that will create, let's say, really is a game changer. So we see that in economies like Mexico, Turkey, that they have already announced that they are going to adopt. That will be a massive change, no? And we start to see companies saying, okay, we want to anticipate this. So I think it's good news.
Thank you very much indeed. I'm going to pick up one question that's come in, and anybody can pick this one up and run with it, but I thought it was quite an interesting question. It says, the EU appear to believe that the world will follow their approach to green finance regulation. Is the era of the Brussels effect over? Who would like to have a response to that provocative question?
No, not easy one, but I will try to do
Good. Okay,
share some thoughts. I have also the privilege to chair a sustainable expert group at the European Banking Federation. So we engage quite a lot with the Commission and with the regulation on the topic. So I think that they start to realize that there are some of the new pieces of the new regulation that works and some pieces don't work. So now is the implementation phase, and we appreciate that the Commission and the European EU platform start to say, okay, let's see what's happening at the end of the day implementing this. We are going to have a workshop in a few weeks in Brussels, sharing banks, implementing taxonomy, implementing the famous GAR, and showing what works and what doesn't work. And they are understanding that this has to be reviewed, no? And I think that's more a pragmatic approach is what we expect that we are going to have now in front of us. And obviously, depends on the topics. On taxonomy, obviously they're supporting other countries, but on the standards or reporting standards, I think that is we have a global standard, which is the ISSB. I mean, we don't have to reinvent the wheel. So I think that's, we have to make a balance.
Would you like to
Yes, but I will also answer not from EU perspective, but from companies who are not based in EU or based in the UK. And again, not answering directly whether the area is over or not, but it definitely had an impact and had an influence. And it's definitely some of the countries or some of the companies which wouldn't even look in the direction of green finance, sustainable finance, and any reporting, or even what it means 10 years ago, 15 years ago, they're definitely looking, they're considering, because the main concern is competitiveness and whether they can remain competitive when European Union and obviously other countries kind of moving in that direction. So it definitely had and it still has a lasting impact in other parts of the world.
Thanks, both of you, for picking that up.
To be a little bit provocative, I would say that we need a complexity reduction act. Okay, so and probably that's what we need to mobilize with the same ambition. Okay?
Always good to finish on a remark like that. Look, we've run out of time, ladies and gentlemen. Look, we've had plenty, I think, regarding this new era of sustainability which we're entering into, including the shifting demands of investors and the risks currently posed by greenwashing that you talked about, Tim. We discussed how adapting our financial architecture could better support emerging markets and developing economies and increase the amount of climate finance available, as well as the necessity of well-functioning regulation to support this. And we've examined the role of the United Kingdom on a global stage for supporting the delivery of net zero, including the opportunity for UK businesses in shaping a new approach to ESG. But I want to say just this as a final remark from me, from the chair. What is absolutely critical, ladies and gentlemen, is that we simply do not allow the risks to outweigh the opportunities in the current environment and in our drive to net zero. I hope you agree with me. I've had an absolutely fantastic panel today. It's been a fascinating discussion. Please put your hands together and give them a very big round of applause. Thank you very much.